Targets in Focus is designed to give traders a further insight into the Forex markets, where FX analysts share their views and latest projections for some of the most traded currency pairs. Joining me for today's edition is Brenda Kelly, Senior Market Strategist at CMC Markets in London. Brenda, if we talk about the activity of the euro-dollar over the last few months, the euro-dollar was captured in a downtrend till around mid-January. After this decline in the pair, a technical rebound kicked in, breaking the downward trend. At the moment, the pair is trading up and around the 132 level. But what kind of movement are you expecting from this pair over the next few months and heading into the second half of the year?
Well, there are a lot of things to be concerned about. Certainly from a technical perspective, it has traded out of the narrowing channel to the upside, and it's now at the sort of critical resistance. But if you see all the certain issues that are on the table, IMF contribution, subordination by the ECB, all of this surrounding Greece as to whether it's going to be implemented is starting to weigh on it to a certain extent. Now, the strong IFO figure today from Germany did help the euro to break out of that particular range. But certainly, we're going to have to look at the likes of the US unemployment and the fundamental data coming out of there to see if we're going to make any stronger moves in terms of euro. But I would expect that the US unemployment will continue to do quite well, and the rising oil prices will certainly impact. So from the 1 month perspective, I'm expecting it to pull back a little bit towards the 130 level and maybe consolidate for the next couple of months between that and 131. If Greece comes to pass after March, and possibly what goes on in the summer in respect of the likes of Portugal and maybe even Italy, we could expect a pullback there with the support around the 128. But if that breaks, then we could see ourselves down to this year's lows around 126.
We're seeing a bit more movement from dollar-yen after being quite range-bound for the last few months. It's been trading higher since the Bank of Japan's surprise announcement to increase its target for asset purchases. In your FX forecast, are you pricing in a further rally for dollar-yen?
Well, it has massive support around the 80 mark, and that is something that we're seeing testing at the moment. So the yen is a safe haven currency, and as a result of the financial crisis, we are seeing that demand for the yen. So yes, we have seen the Bank of Japan intervene and seeing that real bottom earlier this year, about in the 76.50. But now that we see that they're going to get ready to expand the bond purchase program again, it could ultimately weaken the yen further, but for the most part, any interventions have, generally speaking, topped out around the 80 mark and fallen back down towards 78.50 or thereabouts.
And finally, Brenda, let's close on discussing dollar CAD. Dollar CAD is currently trading just below parity on a stronger US dollar. What sort of performance do you envisage for dollar CAD in the short, mid and long term?
Well, it has basically been very reliant on the oil market. So the oil will generally drive the Canadian dollar, but any European crisis will drive the US dollar. So the current issues in Iran are certainly seeing a bit of strength in the Canadian dollar. But in that respect, it depends how this pair will act. It likes to grind around parity, and at the moment it is just below that. I would expect in the near term that if there are any sort of sell-off in the equity markets, that we might see some stronger dollar and maybe push above the 3 months to around the 1.0175. But ultimately, given the quantitative easing that we're seeing in respect of the US dollar and Bernanke more than likely putting some more out there in the next quarter, that over the 12 months we could see this pullback towards the 97.50 level.
It was great to speak to you again, Brenda. Thank you very much. Now, DukascopyTV will be bringing another edition of Targets in Focus tomorrow and, of course, a market outlook for the week ahead. So stay tuned.